talk about cars, not those Blondie YouTube channel. She recommend all these expensive cars. We don't talk about those cars because those cars don't get deductions unless you are in the business of using those expensive collection cars, right? So we are talking about real stuff. We're talking about life, a real life, not a fancy one, but also not a boring one. Entrepreneurs, come on, who is bored? Nobody. And we're just always tasked with excitement, right? Just like me. And one day under COVID quarantine, next day come out, and it just like back and forth. And when is the COVID gonna be over? Come on, give me a comment on the field and tell me. I need that fortune telling skills of all of you so we can get over this, and it's just never ends. All right, so deductions on business use of a car, a regular car, a car that with 4 wheels and we can drive, we can get from the office to the client in the back, and not a car, like those Lamborghinis, probably not. I have never driven one, so I don't know how cool that is. Just on the internet looks cool, right? So now, no responsibility. Although I taught a lot of things on internet, and I cannot label myself 100% correct, really cannot. I would love to be 100% correct. And you probably wish me to be 100% correct as well. But okay, we're humans and we just can't be. Make sure we research. And if you're really gonna rely on my opinions, come over to our firm and get to be our client, and we will provide that solid service for you. Promise. Now, let's talk about general guidelines about car. And I know car, we have to have a car, especially in Midwest. Who doesn't have a car? When I lived in Toronto, I don't have a car. Well, I do, but I got into car accidents so many times. So I ended up just riding buses, and the Toronto TTC bus is so convenient. I don't really need a car. But here, we need a car in business. So what kind of deduction is allowed? It doesn't matter it's a car or anything else. Do you know that the kind of deduction allowed is just by 2 words? The IRS says, as long as it's ordinary, as long as it's necessary. And look at how they define ordinary. An ordinary expense is one that common and accepted in your trade of business. If you're in the restaurant business and you're spending money in the grocery stores in Hy-Vee, that is common and accepted. And if you're spending money in the, buying, say, TV and subscribing to cables to your restaurant, that is common and accepted because people display TV and the monitors in the restaurant, right? So that's as long as it is ordinary expenses to your business. What about necessary? Necessary doesn't need to be like without it, you're gonna die. No, necessary means it's helpful and appropriate. All right, so now I just used that example of the big monitors with cables, subscribing cable channels and to the restaurant. Okay, if your restaurant is kind of like Joseph, kind of high-end steak restaurant, and I can imagine that if we have a TV commercial running in the background, that would be weird. So that restaurant with that kind of atmosphere, dim light, quiet place, and a beautiful host and expensive dishes, cost $1 million, but it's just a little piece, that kind of restaurant may not fit for what I was just describing, right? So that would not be helpful. That would not be appropriate. So that's not necessary. Then they shouldn't be deducting it. But if you are, if you have other kind of businesses and you can justify the business use, then you justify that is helpful, that is appropriate, then it is necessary. So with that, you can deduct it. You can reduce your business income from those expenses. Expense does not have to be indispensable to be considered necessary. See? the word of indispensable to me is a secondary, I call that secondary vocabulary for English as a second language, because when we just learn English for the first 10 years, we don't know the word of dispensable or indispensable. But once you get into business and you follow our webinars and you learn your business in the trenches, you start to get into vocabulary like that. That is what I call the secondary vocabulary. It is really, it's a vocabulary that becoming a norm for business. You see them in the government website, you see them in professional website, you see those people who talk about taxes, they use that word. So that just means that you got that word. If you are an immigrant business owner and you got what I say right here, you're on the second tier of business scaling. You are actually in the higher level than the first one that just start up. So my first book is actually for the first one to start up. My second book coming out, that one is on the second layer of expression or second layer of understanding for the business. So car, let's define car because we're talking about vehicles, right? So we're talking about a car, and the car definition for IRS is van, pickup, and a panel truck. So what is panel truck? Panel truck is like the food truck. The truck is not a semi, and they just build in, they have this panels around it. It's not like for passenger, right? Those are all considered cars. So let's go forward. This is a really good chart. And Catherine, our librarian, and she also just appointed to be the branch manager for Coralville branch. Congratulations, Kat. And she put this out for me. She goes, Ying, this is really good. And show everybody about this chart. So first of all, your car, only for business purposes, IRS is asking you, is it? You say yes, or you say no, right? If you say yes, the entire cost of ownership and operation is deductible. If you say no, then right away, they're asking, what's the percentage? Okay. And on the percentage side, it will be used for your actual expense, because your actual expenses may be $10,000, like your gas, your insurance, your repair, all kind of stuff, right? So that actual expenses will be prorated because you didn't say it is 100% for a business. But if you use standard mileage rate, you use mileage, then you don't have to care about the percentage because you're only going to document your business miles. Then you're going to use the mileage rate to reimburse yourself, right? So this is where it's okay to answer no. You can still do actual deduction, but there is a big difference between when you say yes, you do deduction, that is the ownership of the car also get deducted. That means the car can be depreciated. But if you answer no, but you want to do the actual deduction, that just means you actually really are deducting just portion of that actual expense, not all of it, because it's a percentage of what you have. All right, so let's go to our next thing. So for 2020, the standard mileage rate is 57.5. And that means if you drive 100 miles, then you get $57 back for deducting. Okay, if you had 100 miles for business, you can deduct $57.50. And the 2021 is where we are right now. That's a 56 cents, they went down. So every year the mileage could be different. And I encourage you that before, let's say you have a need to go back to amend or to file your tax returns from before, just make sure you know the mileage rate. They're not always the same, okay? And if you use the standard mileage rate, you can't deduct your actual car expense. You cannot be doing mileage, then you pull out some depreciations or you pull out some insurance. No, that mileage has already calculated the wear and tear, insurance, all of that stuff. So it's all inclusive. All right, so the car generally use this, whether or not you are reimbursed, I'm a little lost with that one sentence. Can generally use this whether or not reimbursed. So basically, if you are a business owner and you drive your personal cars, the car you use that to deliver your kids to school, but you also use that to deliver food to the client. If that is the case, you use percentage, right? Because you are not 100% for business, but that percentage of that, and if you do actual expenses for that car, then you will do percentage. But if you just track your mileage, and then you can deduct it out of the business for that mileage, and whether you reimburse yourself or not is not important. You don't have to really write yourself a check. You just need to track on your mileage, then put that on the book as a deduction, so you will have less taxable income. Because you're the business owner, whether you write yourself a reimbursement check or not is really symbolic. What is important is to have the accounting done properly, so you track your end profit properly, right? If you want to use standard mileage rate, you must choose to use it in the first year the car is available for business. You cannot opt for either mileage, standard mileage or actual in later years. So what it says is that once the car came into the business, it's a standard mileage deduction car, you stuck with that. You cannot say, well, next year I did a big repair. Ooh, I wish that I had used actual expenses. I would get more deduction. Too bad, so sad, you cannot do. Once it's mileage, it's always mileage as long as it's the same car. So that's why it is important to make that determination in the very beginning. I will tell you that when clients ask me, oh, Ying, I got this car for business, and I want to know whether I should use standard or I should use actual. Then I will ask how they drive it. So if the mileage is not over 10,000 miles a year, and they tell me that that car is a used car, I generally tell my client to use actual expense, because when the repair hit you, that's a big bill, especially if it is a used car. You don't have warranties on the repair. You're going to pay it out of the pocket. So it's safer to make that an actual expense method rather than mileage method, right? If used a leased car, then you want to just use it for the lease period, right? So let's say you lease a car for business, and then you will be using actual expense versus or standard mileage. Doesn't matter what you do, and that is for the lease period, right? So because other than the lease period, maybe you bought it at the end of the lease period, but if you bought it on your personal name, then again, it is your personal vehicle, and you can continue to do your mileage deduction if it is the same car. But if you lease that car for business use, and your deduction is limited for your leased period. And a must choose by filing date, cannot revoke the choice. So this is kind of similar to earlier point. Once you file your vehicle as a standard deduction, that's what it is. So you may ask me that, well, what if my business closed, and then I open up another business, and this vehicle and it came out to another business, and so do I have to still stick with standard mileage because I use standard mileage? No, because if you close your business, your asset is liquidated, however you sold it, right? And then when you open up a vehicle, you're actually providing the asset or letting the business use your personal assets. So it's a new starting point. If you have two separate businesses, a totally new starting point. You don't have to continue between the tax entities, right? All right. So the next one, what I have is the standard mileage rate limitation. So I want to tell you that some people has like 10 cars listed for a standard mileage deduction. No. The maximum is 5. Okay. So that's what you need to know. You could have 5 different personal cars you all use for standard mileage deduction. As long as your tracking of your business miles is there, you're good. okay? So that's not a problem, but cannot be more than that. So example, if someone has 3 cars and 2 vans, and they use them for businesses only, one at a time, can they use standard mileage? What is the answer? The answer is yes. The next question answer, I already pulled it out. Someone has a car and the 4 vans for business, and the employee use all of the vehicle. Can they use standard mileage for the car? No, must use actual. Why? Because that's a employee used business asset. You cannot use standard, but you can put the vehicles in your asset, depreciate that. So all your repairs, all your insurance, parking, not ticket, parking, not like the traffic ticket, speeding ticket. Tell your employee don't do that. Your insurance will go up so bad. So all of that is your actual business expense, and you are not using standard mileage for the car. In what case would you use standard? Let's say if you have a business car and your employee is driving, they're driving it for their personal use too. And the correct thing the business owner should do is to have that personal use be reimbursed. And of course, if they reimburse you on the IRS mileage rate, that's great. Then you put it back as reversal to the car expense. But if you have them reimburse you with a lesser rate, it's also okay. So there should be a policy of personal use of company car. And otherwise, you are basically giving that benefit to employee, and that really should be part of their benefit being taxed on their W-2, right? So that is a tip for business owners to know how to safeguard their business margin, making sure that if the car is being used personally, somewhat being reimbursed. All right, so other considerations. If you are self-employed and use car for business, you can deduct interest paid on that car loan, representing business use, okay? So anything related to the car, of course, you know, if you loan car, if you have a loan on the car, of course you deduct interest expense. If you itemize, can deduct line 5C, state local personal property tax on motor vehicle on your Schedule A. And I know this sounds like a garbage right now because we're still under the 2018 tax. President Trump had altered that area of Schedule A. Remember, doesn't matter how much taxes we pay, the state withholding taxes we pay, the property tax we pay, the car tax we pay, all of these taxes, property taxes, they made it, the most we can do is 10,000. I actually really don't understand. I think because President Trump lives in Florida, that's why he didn't care. He didn't have state taxes, so he never think that he's gonna pay taxes on 10,000 because he never gonna pay $10,000 taxes because his taxes were only $700 some dollars, and for all of these years he is running business, right? So he lowered that significantly, but now in Biden's proposal, and that looks like it will be reversed. So I am actually really looking forward for that item to come back because it is not fair for people who are living in the state paying state taxes like California, Iowa, Minnesota, and all of these places. We have a lot of business owners with us, and you know, we just lose out on deductions. So now if Biden's administration able to pass the law with Congress and to put that back, that means you're you know, you can actually deduct the taxes that you paid on the car tag when you are paying it, right? Self-employed can deduct business portion of state, local, personal property taxes on motor vehicle on Schedule C. So what it says is that you actually, if you're self-employed, you have a sole proprietorship business on your Schedule C, then you can actually deduct that over there as well. You don't have to bring it over to Schedule A. And that's a benefit because Schedule A do have a limitation, right? And also if you don't have a lot of stuff on Schedule A, you just use standard, you lose it anyway. So car deduct any business related parking fees and tolls. See, I can deduct. So you can deduct all the parking, that's of course, definitely. But the traffic ticket you got, no, you cannot deduct that. See, IRS do not want you to get any benefit out of violation of laws. So just keep that in mind. When you pay penalty, let's say you file your taxes wrong and you pay penalty, that penalty actually cannot reduce it from your business expense because you shouldn't be really paying penalty. But what about interest? Interest, yes, because you borrow. Basically, when you don't pay taxes to the government and the government charge you interest, that means you were using their money to run your business, right? So interest is reasonable, but not penalty. Penalty in general cannot be deducted. So, and you need to be able to really substantiate your expense when you do this car business. When you deduct a car, you really need to be able to present your receipt. And we have one client recently is working through us with IRS on the mileage. And you know, the client is in the business, drive a lot of cars, drive a lot of miles. So what IRS was asking, not just what I listed down there. If you see my mileage log tracker, there's a date when you travel, right? Designation, where did you go? And the beginning mileage, that's in your car, that's in the car, right? You write down. And the ending mileage, total miles is for business. You can write down, 90% for business, 10% for personal, however you do it, right? Of course, if it is 100% for personal, we don't ask you to document that at all. So with that, it's not enough. So what IRS was asking for the client to produce the oil change record so they can check the mileage tracked by third party. So now what I am saying to you is a tip. It's a tip for you to keep a better record in case you get audited for your mileage log, right? So that tip is not only you do the log, but you also will try to do one oil change at the end of the year and the other one, and at somewhere in the middle of the year. Or even if you just do it religiously at the end of the year, I'm not saying that you have to do it at midnight, December 31st, in that you can do it in the beginning of January or the later part of December, just roughly. So that will prove that from one year to another, you really did indeed drive this much miles. And what if you have 5 cars, right? Then you just need to do that for all 5 cars because you have to demonstrate the real mileage has been written on your vehicle. So this is where we want to bring to your, we want to give you not just what it says on the internet and on IRS website, also a real experience of how you get through the audit and put a smile on the auditor's face and for them to know that you're doing a great job. In order to do that, you really need to do the oil change at the end of the year, okay? And also, for example, this log, I simply just went on the internet and type in mileage log, and I look at all these logs and I pull up one, okay? So you can easily do that in Excel. Just make sure that you have those components. That's the record keeping. That's the most important record keeping we can tell folks who use standard mileage deduction. Then you may say that, well, Ying, are you saying that if I'm not using standard mileage deduction, I literally don't need to keep a log on anything? No, you still need to do it because the reason is that you remember when you say, okay, my car is not 100% used for business and you go for the actual expense, right? That actual expense need to be percentage wise personal and business. So how do you do that percentage? That's by the mileage. That's why the mileage is always important. So it is something that you would want to demonstrate the percentage. So of course, if the car mainly used for business, you don't want to document business miles. So what you're documenting is personal miles, right? So personal miles, you probably only drive it 2 times to Chicago and got some miles on there, and then you log that, and so you have a percentage, right? So that is that is what I want you to keep in mind. As long as your car is not used 100% for business, you need to be sensitive to the mileage split. If you don't document business, you document personal, right? And of course, if you use it 100% in business, I'll give you one more practical tip. And you just say that, well, I know my car is 100% for business, but the car is under your name, the insurance is under your name, and nobody else in your business drive your car. How are you going to convince the auditor that the car is actually being used for business? It's for business. No good way, unless the auditor gonna stay with you overnight. That, I'm just kidding. No auditor gonna stay with you even after 5 o'clock p.m. Okay, so what I am saying is there is another way to make sure that happens smoothly for you. You know what that is to put your company title on your vehicle. When I say to put company title on the vehicle, I did not say that take your name out of the vehicle, put company on it. Of course you can do that. That's even better. You go to buy a car and you buy it for the company, that's it. Company asset, you're only gonna reimburse the company when you use it for personal use, right? So by having the company title on company name on the car title, that make the vehicle asset of the company. And now, when you go to the insurance, remember the insurance is purchased on the people, so who drives that car. As long as that car is not driven by all your 100 employees in your company, then you're not gonna have a huge insurance liability or insurance premium to pay, right? So you need to be precise with the insurance agent, tell them that who's driving the car. Maybe you are the only one driving the car. Then the insurance will be according to you. So not related to, the title. They only related to the title if you total the car, the check gonna be paying to the company, not to you, right? So that's the only point of related to the company. So knowing that it is insurance is go by who drives it, but your tax side of business is go by who has the title. All right. Now let's look at what are the actual car expenses that you need to be aware of. And depreciation, license, gas and oil. The oil is the one that you put in the nose of the car. The gas is the thing that you put in the back of the car. That's how I see that difference. Isn't that weird? And I'm not a car mechanical person, so I understand cars that way. Oil goes to the nose, the gas goes to the back. And the lease payment and the tolls, insurance, parking fee, registration fee, repairs, and tires. All right. So these are all your items for actual. So if your car is not 100% used for business, and all of that needs to be prorated. You can't use, if it is 100%, then you should have moved your car title to the business. It's a business property. All right. So let's look at an example. And you are a contractor and drive your car 20,000 miles during the year. Piece of cake. Contractor drives more than that. And 12,000 miles for business use and 8,000 miles for personal use. What percentage can you claim as cost of operating your car as a business expense? So this is going back to our flow chart, remember? That is the no answer. So no, not 100% for business. And so, but it's an actual method. It's an actual expense method, not mileage. So what we do is we will give a percentage, right? How do you calculate the percentage? Here is the answer. You can claim only 60% of the cost operating your car as business expense. Why is 60%? It's 12 divided by 20. There we go. And IRS will challenge you. So why 60%? We think it should be 10%. Then you will say, here is my mileage log on personal use, 8,000 miles. I drove to the moon and back. So here you go. So this is where, and also the odometer reading from the car repair shop. So there, and that is really in the nutshell and a very clean description of auto expense. So I hope that it is helpful for you. And my last slide is just simply the contact information of our firm and Catherine's email. Actually, if you have some things you want me to talk about, and send it to Catherine. We actually build our webinar based on our clients' input. The reason we talk about auto, I'll tell you that the 30-some people in our firm, I would say that every day, most of us will come to this question. People ask, because now it is time to finalize the business tax return on the 15th. And then there's a huge tax bill. So people start to remember, oh yeah, I have car expenses I haven't really give to you. And I use this car all the time. So it came up because of the need for deduction, came up because of the realization that's not a small amount. Okay, so now make sure you help us to address the most needed question. We also are very alert to what's happening with all of our clients. And so that way we bring the topics to you is always interesting and is always practical. And our phone number, and we do open 6 days a week all the time. We don't close on Saturdays. It's not like we all work 6 days a week, and our folks, we work 5 days a week, but we actually rotate. So we do have someone, we always have people cover Saturdays. So make sure you know that. And I hope you enjoyed the conversation today. I know my background is no fun. And the last time I did in my backyard, and I'm thinking next time I should go to some boat and go some really weird area that to just be there and do webinar. I think you guys like better than me just sitting in the office. I'll continue thinking of creative ways. And maybe next time I'll be on treadmills. This is while talking and doing exercise, right? If I can hold my breath. I will talk to you all again, and good talking to you and seeing you, and appreciate your time. Bye-bye.